Welcome back guys. Do a little refresher. Let's see what's going on. In today's live video, I want to talk about a few bits and bobs regarding Bitcoin and what I'm seeing. So we're going to kind of follow up on what we did yesterday. So I remember, if you remember yesterday, we talked about the relative unrealized profit and loss and all of these kind of fear and greed and optimism. There's a reason behind this, because what happened was we had a person, a viewer, who went on the comment and said something. Let's have a look at this. 1 second. 1 second. Dashboard. Where is it? Comments. There we are. Sorry, my bad. Let's have a look at this dashboard. And there was a comment here. Yes, Stephen Hendricks, right? So Stephen, what he said was really cool, right? Stephen Hendricks said, you know, what if the game change and there is no euphoria phase anymore because of big smart money taking profits on time and playing the markets even more than before? Your point is bang on. So let's go into this and let's have a look at all of this and see what's going on here. So obviously we kind of talked about how the market, we all wanted, everybody was excited about how the institutions are coming on board, how Michael Saylor came on board, how Tesla came on board, right? Technically, that is what created a little bit of a euphoria, right? Technically. Now, the euphoria mode we're talking about, funnily, it wasn't here. So this dump here wasn't the euphoria. This is the coronavirus dump. This is when all the institutions that are interested and have probably been trading around here in the, you know, as a secret thing, they decided to hedge against what would happen because they expected the stock market to crash. Right? But stock market didn't, because it was artificially kept afloat, right? So because of all the money printing and everything, there was a big balance there. That's what happened, right? All right, okay. So brother KR just said he's there already. I'm not actually looking at the live chat. Carry on, guys. If you're talking, carry on. I'm not actually checking. I might be able to check actually. Give me a second. Let me see if I can see. There may be a way for me to actually see the live chat. No, I'm not actually seeing it right now. Also, bro, KR, can you do me one favor? I can see you're on the stream. If you look on the bottom, you can see there's a little YouTube sign that shows one person. That's you. Can you share the links to the group and everything so then other people could jump on as well, and then we continue with this, right? So it's going to be a very short one, so I'm just going to carry on and just fly through basically, if that's okay with you. Okay, so you do that for me, please. That would be really nice. And let me switch to so my remote is bugged out. Okay, now I'm back to normal. Okay, so now you can see my cursor. So what we're looking at is obviously what we're saying is this was a particular hedge. So all the institutions that were interested, they hedged against here. Now, we know Michael Saylor entered around this particular level here, which is the optimism, or this is what he says to us. So he says around this particular level he entered, and then we also know that he re-entered again around these particular levels here. He re-entered again, right? So he's been doing average cost buying in, and currently I think his average, if what he said, if I'm correct, it was around 21 to 24,000. I can't remember off the top of my head, but his average buying cost was around $21,000. Now, there's a reason. Obviously, he's not going to buy on an average buying cost knowing the market's going down, because remember, there's more people, more superior data TA analysts, right, who are working for him, and they can do the projections and they can see something. So him being, if he did buy at, say for example, $21,000 on an average from all of his buying here and all of his buying on the top here or wherever he bought, right, his average cost comes to 21K. I'm just giving that 21 as a bottom figure, baseline figure. I'm not quite sure, as I said, I don't remember, but that's the situation here, right? So that then takes us to a level where, you know, he knows something and he's expecting that we're probably not going to drop below these levels here, right? So let's just stick around there, because remember, BTC currently prices here. This is people sentiment, right? And this is the market cap itself. This is where we are right now. So we entered the euphoria mode, right? So the sentiment, the euphoria sentiment started around on this top line here, if you can see here. So Elon Musk comes in and everything. This is euphoria stage, right? So, but this is just the price on the euphoria, but the people didn't actually follow through. If you look carefully, I think we can zoom in. Let's try and zoom into this particular area. If you look carefully, right, so this is where it all started. This is like kind of where, what was his name? Elon Musk. Around this level, we knew about Elon Musk coming in. Remember, they bought it in December. They announced it in January or February, I believe it was. They announced it somewhere around here. So they announced it right up here. And then we had this little spike here. So he gave us a little bit of a spike, but the market at that very same time, when everybody was expecting the market, so coming to what you said, right, you know, how you said that maybe they're playing the market. Absolutely. Right at this moment, Elon Musk announces, right around this particular moment, Elon Musk announced that he bought $1.5 billion. Obviously, they bought it prior, so they're already in profit. Euphoria mode kicks in. And then what happens is other people, because the news is now out there, the FOMO has kicked in, they monetized on that and they started selling, right? That's what they started doing. They started to sell their BTC. Right, and we can see a lot more information on this while we move through. So if we move through on the not this one, let's go to the other one. Let me see if I can find it. This I want to show you. This is Willy Woo. He created this particular indicator. It's a difficulty ribbon. It's based on the I think it's based on the hash and also the logarithmic, based on the 200-day, 128-day, 90, 60, 40, 25, 14, 9 day moving average lines. And what he says here is very simple. When they become thin, when they start to converge and come together, and this particular level is thinner, so when everything's together, this is the time you want to go in. So again, we can see this level here. This is the perfect time to start buying, right? So these are accumulation zones, right? When you see this line being thin, right? Currently the line is thick, which means it's not an accumulation phase. So this is something that he's basically made, and he said, look, have a look at this and then see what this is showing. So when we come into zones where we are, I just want to show you quickly, let me zoom into this area, right? So if it becomes all thin, everything comes together, this is the time when you basically buy. And I'll take a little bit more on this one. So I found another indicator on on TradingView that I can actually show you this particular model. It's slightly better because they use the same fundamentals. Now, the other thing here is we're looking at the Bitcoin balanced price, right? Which means this is the price of Bitcoin and this is the price that it should be. Right, and there's a little bit of a confluence I find in this one. So what this is indicating, so you know, it is tracking you know, certain levels and everything, but when we come here we see something quite funny. I'm going to bring you to this particular one again, right? So this is following kind of the logarithmic chart, right? So on the logarithmic chart, currently showing on the balance price is saying that it should be on the 15th of July, the price should be around the 16,000. That would be the balance price. That would be like the perfect price for Bitcoin. So this is telling us what the perfect price should be. The only time we actually hit the perfect price pretty much on the dot was during this particular 2021, right? So if that makes any sense to you. Now let's move over. Actually, I'll show you a little bit more on this particular one. So let's go to all time and show you how many times it's actually hit the perfect price. So we had 2021 perfect price, right? We had 2018 a perfect price here in December, at the beginning of December, as you can see here. For example, this was in 2015. Right, this was in 2015 again. So there's been times, this is a slightly different type of data, where we've hit that target, pretty much the price we should be at, you know, the market should be. So these are overextended prices, and obviously when we have an overextended prices, we are going to have a pull down, right? So when we're looking at that, we're pretty much looking at these levels here, and we're saying, well, we're overextended here, we need to pull back down and come back to these good zones. So pretty much following all of these trend lines here, right? So let's go back and show you something else. So on this one, I wanted to show you something interesting, very interesting. So kind of going off topic, but that's because it's just here right now. I just want to show you this. So this kind of tracks, right, the holdings for 3 specific ETF or ETF-like. So Grayscale is an ETF-like, but these are actual ETF, and this is QBTC. Right, so these are all kind of doing the same kind of a fund management. Now, what you see here, Grayscale, right, how many holding they have, and their holding has been very good. So previously, as you can see, they've held a lot, right? Back in 2016, 2017, I mean, the peak was in 2018 where they held a lot. And then, you know, they didn't really hold as much. So if you look at the bars, you can see, so currently they're holding in a bit, but it's like a steady decline, obviously, because of the price appreciation. Probably they're not buying as many, but they do have a lot of holding and they're still holding onto it. That's good news. But then when we move into, say, for example, Purpose ETF, right, which is another one, what you see here is a complete opposite thing. You see the price incline, they've been buying, Price decline and they're still buying. This is very bullish. This is them still buying right now, right under your nose. While the price is going down, their holding is increasing big time. Let's tell you who the culprits are. QBTC. Have a look at QBTC, what they've been doing. So they've been holding a lot, right? And they started holding, as you can see here, 2021 February. They just went steady, bang on, and then look when they dumped. May 31, they started dumping. And then they've been dumping ever since then. So these guys would be your biggest culprit who's been dumping on the actual market, if that makes any sense to you, right? This is what they've been doing. You know, we can see how much they're holding. They were holding 23,000 Bitcoin. And currently, how many are they holding? They're holding 12,000. So they sold 50% of their Bitcoin. Do you see what I'm trying to say? Well, almost 12,900, right? 12,900. So that's what they've been doing. They've been selling, right? So when we look at these guys, we see that their holdings are growing, right? Currently, they're holding 22,500 Bitcoin, and Grayscale is on another level. Okay, so currently they're holding, let's have a look. Currently, they're holding 650,000 Bitcoin. 650,000. So these guys are definitely holding. This is good. They're not selling anything. They're not dumping like people think they are, right? These guys here have been creating issues. You see? So these are the kind of stuff you need to understand and actually see on the thing. Okay, so there's a few guys on the chat, on the stream. Anyway, let's move over to the next one, right? So number of addresses with non-zero balance. This means they have at least a Satoshi in there. Right, and what we see here is this is 2017. So in 2017, after the dump, we had many wallets with zero balances. Means they cashed out, they just left. But since then, we've been seeing this, and I want to zoom into this just to show you this. This is fascinating stuff. Right? Let's have a look at this. Since 2017, right, where we had these brand new wallet addresses coming in with balance, non-zero balance. Currently, look. It's been on an incline, non-stop incline. That's what we're seeing. We're seeing a non-stop incline here, right? We're seeing currently how many we got. Well, I'm not sure if this is 100% accurate, but it's showing 30,300,061, right? That's what we're seeing right now. So all we're seeing is basically a massive incline in these wallets. I mean, we can zoom in even more just to go in and see, okay, what's the actual data show? So far, look. Zoom in even more, all you're seeing is the incline. So more and more wallets are coming. Who do they belong to? Obviously, we can only take a guess. You know, half of it probably retail, but majority of it, I can tell you, institutions are coming in. They're buying right now, right? Let's move into the next one. And this is, again, number of Bitcoin addresses. So again, you can see the same thing. It doesn't matter about the price incline or decline. This is the entire history. And what you're looking here, again, same thing. It has not stopped. You look carefully, it's on an incline. Regardless where the price is going, it has not stopped, right? We're constantly growing. More and more new users are coming. And of course, El Salvador kind of gave us the help as well. El Salvador gave us how many? 6 million new wallets, apparently. So currently we're sitting at 853 million addresses. 853 million addresses. I mean, we're bound to, but I would say by the end of the actual bull run, so when we do have the market top, I think we're going to hit a trillion people. A trillion wallet addresses. Is it a trillion? Billion? No, we're going to hit a billion. Sorry, we're going to hit a billion. I think we're going to hit a billion addresses. Currently, we're at 853, so we're only approximately about 150 million away from hitting a billion. My bad. Sorry, sometimes my math goes away. But yeah, that's what we're going to be looking at. And so far, everything looks very positive. And remember, I told you about this particular area here, right? Stock to flow deflection. So currently, it's a massive gap. We see this massive gap here, and this gap needs to come back to here. And right now, this is where the institutions are accumulating. This is exactly where they accumulate. In fact, this is where, if you look here, this is 2020, March 2020, the dump. And currently, if you look carefully, right, this is what we're seeing. So this tells me a lot of stuff here. It says like really good stuff here. We're going to see this. This is where the stock to flow is going to rebound up. That's what we're going to see. We're going to see it rebound up back to this line. So it's going to have a nice little bounce. But it's not the first time. I know some people have said, oh, it's the first time in history. This is what happened. Actually, not. If you look carefully, right, this is 2018. So in 2018, when we had that kind of a dump up to 2019, we actually were below the line quite a bit. You know, even here, even during this 2020, pretty much about 6-7 months until August, we were still below. You know, we were still kind of holding underneath or on the line, and we did have a nice little dip. You can see this dip here. If you look carefully, I'll show you carefully. These are data points that you need to actually see, and this is on chain, right? So what you're seeing here is we did, right? So here we came back up again, and then we were like kind of on it, and then from June, right, all the way to January 2021, look, we were below that line. So now, yes, of course, we deflected quite a bit, but that's fine. I don't see a problem with that because this model doesn't exist. This price doesn't exist. This is a projection, nothing more. It's based on maths and algorithm, thanks to Plan B, but ultimately this doesn't exist. But we want to be there. That means the market needs to react to bring it up there. You know, this model only reacts to what the market is doing currently. So of course it's going to come here. That wouldn't worry me at all. This is giving me a signal telling me this is the time we should be buying. Okay. Also, well, we talked about this one. I don't want to talk about this one, net position, all exchanges. So the positions, like, you know, let's leave that. Let's move over to what I want to show you today. So what I saw today, right? So what this, you know, the indicator I was talking about, the, where is it? This particular indicator. So we're going to bring this indicator here right now. So let's get rid of this, and let's activate this. It's just basically, it's pretty much the same thing. What I want to show you is pretty much the same thing. Let this activate right on a daily. What I want to show you, and I want to show you on a colored version, so much better here for you to actually observe, right? So when we see these squeezes he's been talking about, so we don't have to see the squeeze. Now we can visually, right? We can visually see exactly where we are, right? Without actually worrying too much. All the moving average levels are on this. But we are seeing this slight bearish pattern, and we are seeing a squeeze forming. I don't know if you could see this, right? See how all of this area, so let me see if I can make it larger for you. You see how all of this is converging and everything's coming down, and then all of a sudden this particular level here, this 200-day, is now starting to move into the level where it's going to create a squeeze. Well, when this squeeze is created, and look here what happens when we have the, so it widens out, and then we have this flippening like a squeeze, and this squeeze for us happened in April 2020, right? So when we start looking, going back again and saying, okay, when was the last squeeze in like the 2017 one? So 2018 one, we can see that we had the in 2019 March. So we had, this is when we had the squeeze, kind of a squeeze, and we just flipped over, right? The indicators flipped over. Also here you can see that the indicators flipped over, right? So, you know, when we're looking at, so this is 19, my bad, I'm going on the weekly. Actually, I can't show you on the weekly because it's a daily chart. So what we're looking at here is when this flips over, this is when we basically end up having a bullish run, right? So this is 2012, this is 2013, and this is kind of similar. So I know I keep on talking about it. I know you guys hate me for it, but I want to show you something. This is fascinating. So this is 2013. This is the dip we had in 2013, and this is the top we had. Now let's go back to where we are, right? So I want you to visualize this. Really awesome. And I have 5 minutes to finish this stream. So visualize this particular area here. That's all I want you to do. Visualize this area. And let me get rid of the drawings because they're going to mess you up. So visualize this, and let's move back up. If you have to rewind, you're about to see something insane. Okay, insane. That's what I'm going to say. Insane. So we're going back to 2021. This is 2013 and this is 2021. So what you're about to see, what you're about to witness, will blow your mind. Look, the same pattern. Can you see this? The same pattern. This is what we had. So if we've had this and we then want to track this pattern, we're going to say, okay, this pattern here, we seem to have these come up quite often. How many times do we have them? So this is 2020. And then we have a massive move up, all right? And then we want to look at again, we're going to see, okay, this is 2019, and then we have a move up. Okay, fine. So then we have this area here, which is in 2015, right, coming into 2016, and we have this area. So this is us coming out of this bearish situation, moving back up again. Okay, fine, right? And we keep on seeing these patterns here. These are the areas we're looking for. We're not looking for the bear, because when we are looking for the bear, very simple, where is it? Let me just Okay, let me, I don't want to activate this. Let me show you this. I'm going to activate this in a bit. Give me a second. I will activate it for you, but I just want you to see something here. Because these are some fascinating stuff, right? So when we do top out, right? When we do top out, so there's that indicator I want to show you. It's a public indicator, guys, and I really recommend you guys to go and see it. If you're newbies, right, you definitely need to use this indicator. It's really cool. So while I was doing some research, I ended up kind of bumping into it. I was like, wow, this is really cool. I really like this. So let me go on a weekly on this one, just so I can zoom in and show you what's going on. So we know the market tops are around here. We know these are the market tops, right? We know these are the market tops. So we've had, so far, we had 1, 2, 3 market tops, and we're expecting a 4th one right now, right? And I am going to use this chart for something else, so I'll show you in a bit. But you know, that's what we're looking at. So let's go 5 minutes, quickly get this done. So when we're looking at this area, we know that we have these kind of a flippening effect just before the power move, right? So we have this power move, right? So 2015, obviously, you know, we end up coming, and 2015 was just a different level. Remember I told you, I mean, 2015, I didn't even realize we were in a bull market. This bull run was long. Can you see this? This bull run was long. People may have freaked out on every single one of this dip, but that 2015 dip, my God, I have no way of explaining to you how powerful it was. I mean, where we were to where we went, right? The low we had was this particular price here was the low. So if you look at I'll just give you, like, from where we moved on, it was at $258, and then we shot all the way up to 2017, where we did our 19,804. Remember the 1984 as well. It's a powerful number. I want to talk about this number as well, because there's a lot going on, and it's going to be relative to that indicator I want to show you, right? It's really crazy. So let's go back to this chart and let's have a look at this and show you what the bottom of this range is right now. So if we look at the top of this line, right, which is the 19,800 and something, somewhere here, 19,800, just say 800. Well, if I put a line here, just for the sake of it, I'm sure I've got one there already. I'm just going to put another line here, right? That's a simple line. And I want to show you what I'm seeing. So we'll move into this chart in a bit as well. I'm going to show you a little bit more. But this is like the worst case scenario for us if we do have a rebound. So this is going to be the point where we are going to do the bounce, right? This is the worst case scenario, right? I'm not going into anything else. Now let's go back into this specific chart without any drawings or anything. Let's activate this particular indicator. It's called Bitcoin Bulls and Bears. Whoever created it, honestly, has done a fantastic job. So what he's done, he's actually plotted, right? He's plotted all the all-time highs on the chart, right? And he's actually even shown it in color where you're currently, what he's showing you. So this is the 21 weekly support range, which is the 46,000. We need to get above the 46,000 in order for us to still continue the bull run. And if we do have the low, then look what the low is. The long time support is at 19,456. Not far off from where we need to be. So he's obviously calculating it through here, which this is fascinating, right? So he's using a different metric. He's looking at and let me switch it off just to show you, and also switch this off. He's calculating this zone here, which was a traffic zone. It was a heavy traffic zone. And he's calculated that, and he said, well, this is the case. Then in that case, the log chart, and he's using the log chart as well. The log chart should be at this brilliant job. Go check it out. Bitcoin Bulls and Bear, one of the best indicator I've seen so far. I mean, just for basic use, it's got nothing. This doesn't really show you anything, I'll be honest, but it does show you who's in control right now. You know, in color, we can just see, okay, bears are in control, bulls are in control. Bulls here were in control as well. Even though when the market was going down, the bulls were in control, you know? So we can see all of these things defined by color. Very easy, very simple. Now let's go back into this chart and let's actually do today's analysis, right? So what we're going to be expecting. So let's have a look at this. Let's look at this on a daily time frame. It's on a weekly, on a daily time frame. Let's have a look where we are and what we expect for the weekend, right? Because we're in the weekend right now. So same chart, same everything. I'm not going to change anything here. Again, you can see this 30,000 level is definitely currently on an hourly. So this is on a 4-hourly level, right? When we observe on a 4-hour level, we can see that we might be finding some sort of a support around this particular level here, which is the 30,700. We might actually find some support here. Currently, this kind of basic line that we had. You can see that we're down, we're below this, and we are trying to get above this moving this trend line itself, right? And when we do, I think we're going to be okay. So this is, remember, it's not a fixed line. This line could be adjusted, but I've still left it there because it is quite relevant right now. It's relevant because we are time frame. If you look carefully, this is a very, very mini time frame just here. You see this is a mini time frame, and so far bulls seem to be in control, right? Bears did try, but bulls seem to be in control. Also, if you look at the RSI, so if we move into the RSI, give me a second. Let's move into RSI. So if we move into money flow indicator, there's a purple is the money flow. We can see the money's flowing in. Okay, so that's showing us a green sign. This one here, sorry. So money's flowing in. It's on a positive, it's on a bullish divergence. Also, when we look at the RSI itself, we can see that the RSI, we had a dip, but right now we're actually on an upward trend. Again, two bullish divergences. And in fact, if you look at all the wallet addresses and everything that I've showed today, everything is indicating bullish. Everything is indicating bullish, apart from these guys here who actually caused a bit of damage. Now, if they can only cause damage, by the way, on chain, they can't actually do any damage off chain, if that makes any sense to you, right? They can do anything they want on chain, but not off chain, right? And here we're basically tracking the, so this is another indicator that I am using, just momentum indicator, just trying to track the momentum. So far we can see the momentum is down. So we have this bearish sign on the chart, right? On the chart we're seeing everything is bearish, right? So this, about the volume, you can see the $1.2 trillion, right? This is what we were expecting to come down to, and we are going there. We're going to have a bounce at that point, or we might break down and we might lose it, right? Right now, I'm not giving you a prediction of where the market, what direction is going to go, because it's really, really tough to see that. We're very indecisive. Remember, we're coming into that zone where we're going to have that squeeze, where, you know, we're going to have that convergence point, and then we're going to decide whether we go down completely or whether we move back up again. So this is very, very indecisive for that particular reason. You know, on the worst case scenario, what I can see, right? And why is this doing this? My bad. On the worst case scenario, what I am seeing, and let me switch all of this off just to show you, right? So let's go back onto the daily, just to show you daily time frame. On the worst case scenario, on the current situation, we can see this 29,000, right? We can see this 29,000. Obviously, if we do have a double bottom, then we might see the 28 again. But if we do see a 29, that would be perfect. That would be a perfect bounce back up again. So easy, we should expect this. I would personally expect this. I can't expect the bulls to just take over and, you know, bring us up. And if they do, then we need to get above this line. If the bulls want to control, then they need to come above this line. You know, this is a very crucial key level right now. And if we were to go, you know, back into the bull market, then obviously this is the line that we need to get to. Right, this particular line, you can see this 46,000 average level here, this zone here is where we need to get up to. But right now I'm expecting anything to come down up to here. This weekend may be a bit bullish, but I think we got another few more weeks. I don't think we're going to see any action until August, maybe even September. Probably even October, right? I don't think we're going to see anything until the end of the year. So let's see what happens. Let's observe. But I did mention on another video previously, I said, this could even last all the way up to March 2020. So we might actually see something there. I'm 1 minute over my time. So guys, I'm not going to make this any longer. Like, share, subscribe, smash the share button. You know, share it with everybody. Smash the like button. Also, I want to give a good shout out to Stephen, who asked me that question. Stephen, you're 100% right. I mean, they could be playing the market differently, but we did have a price euphoria. We didn't see the thing, and trust me, they're going to monetize on the euphoria. They need the euphoria because they're going to make maximum amount of money. I'll tell you what they do. They buy BTC and they long BTC at the same time, and then they cash out so they can double their money, triple their money. That's what they want to do, right? So whatever appreciation they will get on their coins, of course they're going to make that, but they're going to long it at the same time. And when they sell, guess what they do? They short it at the same time as well. So they do a double trade. You have to understand this. For them, it's more beneficial for them to go into the euphoria. So that's, hopefully that kind of answers your question. And yeah, and I want to say a big shout out to Jedi Knight 85, who's a new member on the channel. Thank you very much. He became a member after I readjusted everything. He's a member just to support the channel. I really appreciate it, bro. Thank you very much, Jedi Knight, you know, for supporting the channel. It does really, really help. So, you know, keep up the good work. Like, share, subscribe to your social media, so everything. Let's get the content out there. Let's move forward. So other than that, guys, I'm not going to say any more. Let's call this quits, and I'm off. I'm 2 minutes late. Adios, my amigos.